discussing impact investing, investing in firms or organizations with the aim of generating beneficial environmental or social impacts. And even though impact investing has grown tremendously in recent years, there's also been quite a developing debate as to whether impact and profit can really coexist. And to discuss this with me today, I am joined by Jim Roth, who is the co-founder and partner of LeapFrog Investments. Thank you very much for joining us, Jim.
My pleasure.
So first off, could you tell us a bit about, in LeapFrog's case, how do you reconcile profit and impact? How difficult is it to retain the integrity of the fund?
Well, we haven't found it very difficult at all. What we do is we focus all of our investments. We invest in emerging markets, particularly in Africa and Asia. And we focus on a group of people that we call the emerging consumer. So this is the group of people that have left poverty and are now beginning to get something of a foothold into the middle class. And as they get a foothold into the middle class, so they begin to buy the sorts of things that people buy when they reach that level. They begin to buy houses and apartments and cars and motorbikes and washing machines, and with those things come financial services, and in particular one of the things that we focused on is insurance services. And so what we found is that by focusing on the sector that's typically a financially excluded sector, and by providing them and focusing on firms that provide them with quality, relevant and affordable products, we haven't struggled we've never needed to trade off the two.
When we do talk about impact, how do you measure impact? What does impact mean to you?
So it is those, I guess, those the key metrics for us, and we break them down in detail, are quality, relevance, and affordability. And then we also look, so, are the products that are being sold relevant to the people who are buying them? Do they serve a particular need? Are they affordable? Can people actually buy these products? So, for example, we look at things like in insurance, say, how quickly claims are paid. So if claims take a long time to be paid, it's not only bad for business because clients are unhappy, but it also has a negative social consequences because people have had an adverse impact, and it takes a long time for them to get paid. We look at how many claims, for example, again in insurance, are rejected. Again, that has a clear commercial orientation. You need to know whether or not customers understand the products, and it has a social impact, right? Because if lots of claims are being rejected, it may indicate that clients actually don't know what they're buying, and then the question of relevance comes into play. So that's broadly, and we have a full-time team.
Which is actually in-house.
Which is in-house, that measures, that works with portfolio companies to measure social impact.
And again, focusing now on insurance, I think one of the most interesting investments that you've made was in Bima, which is a micro-insurer. It operates in markets like Indonesia and Bangladesh. Could you tell us a little bit about what Bima does and why you decided to invest in it?
Sure. So Bima is an extraordinary business. And in order to understand what they do, they work with, they sell insurance using mobile phones, and they're growing at a tremendous rate. They've been growing on average over the last few years at 700,000 subscribers a month, which, if you think about it, is an absolutely phenomenal growth. And they're all over Africa and Asia. They're in Bangladesh, they're in Indonesia. And what Bima do is that in emerging markets, people typically, they have pay-as-you-go schemes. And there's a lot of churn because what subscribers do is they tend to know that in different times it's better to use this provider versus that provider, etc. So gaining customer loyalty is one of the things that the mobile network operator really wants to do. So what Bima does is it goes to mobile network operators and it says, look, we will provide life insurance which will be free to your subscribers, right? And the more they top up their pay-as-you-go schemes, the more life cover they'll get, and you pay the premium, right? So it's free to the client. It's a model that also ensures quality, relevance, and affordability because the mobile network operator will only continue to pay as long as it's relevant.
Finally, when we look at Asian markets per se, are there some countries, some markets that are harder for you to look into, that are a bit tougher to crack?
They all have their pros and cons. I mean, there have been challenges in some markets. In Indonesia, for example, asset prices have been pretty high, so it tends to be quite tough to find deals in Indonesia that meet the profit criteria, that come out with private equity style returns. In the Philippines, there's a lot of domestic capital. Again, that can create something of a challenge. So those are some of the challenges that we've had.
Hopefully, though, as these markets grow and the capital markets continue growing, then hopefully also for private equity firms, there will be more opportunities. Well, thank you so much for joining us, Jim, and good luck with all these new ventures.
Thank you very much for the interview.
Thank you.